120 is certainly a leap from the latest financing round, which put its value at $76 billion. So that is a huge amount. But remember that bankers are pitching Uber still. So that could be inflated. We'll see what actually happens. But it is going to be important who's going to be first out of the gate, Uber or Lyft, because the first company is really going to set the tone. It's going to attract more of those ride-sharing capital, and that could result in a higher share price. So it's no surprise that Uber and Lyft may be jostling for that position. Now, Lyft has selected JP Morgan to lead its IPO, while Goldman Sachs and Morgan Stanley are reportedly vying for the role of Uber's lead underwriter. And that, of course, is a position that means higher fees and more glory. Narratives, they're also starting to emerge as both companies get ready to present to investors. Uber's valuation, as I mentioned, that $76 billion is more than 5 times that of Lyft's $15 billion. Uber has logged 4 billion rides globally last year. Lyft had 375 million, but remember, it only operates in North America. Now, both companies are still losing huge amounts of money, but those losses are narrowing and revenue is increasing for both. Now, perhaps one of the most important differences between the two, though, is that Lyft is more of a pure play in ride sharing. Now, the smaller rival has really emphasized its gains in market share, putting its market share at 35%, up from 20% in early 2017, capitalizing some of Uber's problems over the last year. So Uber, meanwhile, has been investing in a whole host of businesses, from food delivery to flying cars. There's Uber Health, a bunch of others. Now, via email, I reached out to Uber CEO Dara Khosrowshahi, and I asked him, how does this all fit together? And he told me that he sees Uber's platform becoming the Amazon of transportation and movement, and he hopes that all of these businesses will eventually be profitable. Guys, we'll certainly see once we get closer to those IPOs and the companies start pitching investors. Back to you.
You touched on this, but that idea of $120 billion, I mean, that is Wall Street pitching these companies. How realistic is that?
Well, there's a lot of folks that have been waiting for a ride-sharing company to come to market. So I think that there is a lot of excitement. But a few of the analysts I spoke to say that Uber has been private, for so long now that so many different funds, you've got T. Rowe, you've got Fidelity, you've got these big players that have already been invested in Uber, that it makes you wonder how much more can they put in, or how many big institutional investors out there are going to be able to invest when perhaps they've already allocated their money to ride sharing.